Hello everyone, Jonathan Lee here, real estate sales representative based out of Toronto, helping to educate you on real estate matters and maximize your value propositions, whether that's getting the best deal for you buyers or getting the most money for your properties for you sellers. Today I'm talking about market value in real estate, how it changes and how you can maximize it. In exchange traded assets like stocks and futures, market value is pretty simple to determine since they're traded widely many times in a day. The information is readily available, you can just Google it, and generally a share of a specific fund is identical to what had just been sold. In real estate, however, homes are generally unique from each other and sold to a single buyer once at a moment in time. So market value tends to have wider ranges because no property or buyer is identical. Market value is a term that realtors, mortgage brokers, and appraisers will use in relation to what a property is worth. In the simplest of terms, market value is a price that qualified buyers would be willing to pay for the property in a moment of time. I say in a moment of time because the price that a buyer will be willing to pay for a property is continuously evolving and is never fixed. Similar to how a share of a company is always moving up and down, so can market value in real estate. Today, a buyer might be willing to pay $1 million for a certain property, but in 3 months' time, that could be $1,020,000, $1,050,000, or maybe $980,000. And so market value will change according to the confidence and needs of buyers and sellers and the perception of value in the market at any moment. Generally, rather than saying a property will sell for a specific dollar amount, assessments will be a value range between 3 to 10% of its expected sale price within the same market cycle. In today's economy with fast rising inflation and the rapidly moving real estate market, it's important to be cognizant that market value can change very quickly. So how does market value change? Well, at its fundamentals, it comes down to supply and demand. The demand for a style, location, or price point of property can change, and the supply of that submarket of property can also increase or decrease. Over the past 2 years of the COVID-19 pandemic, we've seen a real drastic change in the types of buyers that come onto the market and their wants and needs. Furthermore, buyer and seller confidence in the real estate market has gone from the lowest of lows to the highest of highs and are often very much influenced by potential changes to interest rates, public policy, politics, and the economy. Here are a few events I've witnessed in the real estate market in the last 2 years to exemplify how quickly market value can change. So first off, it's March 2020 and the pandemic has officially hit the Greater Toronto area, and unfortunately, one of my listings goes live the day before the first lockdown is announced. Of course, all buyers fall off the map and there is concern of instability in the market, and buyers suddenly become very cautious and submit lowball offers for fear of a market collapse. Fortunately, my sellers decided to wait the month and a half or so for things to stabilize. However, as I watched the real estate landscape across the GTA, there were a number of sellers who sold quite low, likely in order to fund and close recent purchases. Here we see low confidence in the market choking the number of active buyers, with sellers needing to sell low. So let's move along to the summer of 2020, and city and condo living is no longer attractive and work from home is getting uncomfortable. Buyers want more space, more privacy, and start to move out to the suburbs. The migration to the burbs creates a steep increase in demand while supply stays the same with increased competition on listings. This puts upward pressure on prices in suburban homes while urban homes sit stagnant with less interest. Here we see the changing wants and needs of the buyer market affecting market value. November 2020 to March 2021 turnaround. Following the announcement of a variety of high-efficacy vaccines and the impending rollout, the real estate market rebounds with light at the end of the tunnel, shining a potential end to this pandemic. With higher confidence in the economy and low interest rates, buyers come out of the woodwork with home prices peaking and holding from March to August 2021. Here we see the news of global vaccines shift buyers from being bearish on prices to bullish in a matter of weeks. Fall of 2021, the time of the investor. Following an active summer and a brief slowdown during the fall election, investors and consumers alike are in agreement that interest rates are very low and inflation is coming due to all the printed money that has been keeping us afloat throughout the pandemic. Are home prices high? Yes, but investors seem to believe that cash is now a depreciating asset and holding tangible assets such as real estate will be a better way to hedge against inflation. Here we see the buyer base changing from end users to investors with deep pockets, changing the value landscape while supply is still extremely limited. So market value adjusts through changes in supply and demand, but is there a way to maximize the market value of your home? In a stable and balanced market, yes, to a degree. It would require increasing the buyer base for your home, so finding as many interested buyers as possible. This can be done in a couple ways. One, minor home improvements, paint, swapping out light fixtures, etc. You can watch my other video on 8 affordable rentals for ideas. But a beautiful home attracts more interest, which may result in more offers on your home. 2, listing price manipulation. It's hard to say how effective this strategy still is, as so many buyers have been burned by underpriced homes, and it's become transparent on what listing agents are doing. But artificially listing your home low, lower than you might even be willing to accept, often gets more offers submitted, and the serious buyers often go big for fear of missing out. 3, highlighting unique or attractive features in a home or a neighborhood. Essentially marketing your home as a complete one of one, again in the hopes that buyers will go big because this home will not become available again. Since market value is a price that a qualified buyer will be willing to pay, when it comes to a beautiful one of one home, only one buyer will be able to purchase it, so decommoditize it any way you can and make your home the prettiest girl at the ball. Lastly, know your value positioning on the market compared to other homes. Sometimes you as a homeowner can be too close to your home to see its value, but it's your realtor's job to take you through other homes that are on the market at the time to see how you fare against the competition. Don't be too swayed if your top price comes in lower than you expected, and have some confidence in your home. So what do you think, guys? Leave your comments down below. If you need to reach out to me for service or advice, you can find me online at JonLeeHomes.ca, by email at JonLeeRealEstate@gmail.com, on Instagram at torontos.johnlee, or you can text or phone me at 647-983-0770. See you guys on the next one.